The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. My pleasure to be here. And today, of course, very important day. We're 12 points away from making the 20,000 level in the Dow. This is, of course, it's the 20th day of December. Tonight, I start my webinar number 2. This is a perfect time. Why is it a perfect time? Let me show you why. You know how we look for leg Ds? That's a part of the characteristic of the Chapman wave methodology. Let me just show you the actual template that we use. Looks like this. Price comes down. You identify a low bar of consequence. Merely count each successively higher peak. Each peak gets labeled alphabetically. Uppercase on the way up, lowercase on the way down. You expect 4 peaks to go peak A, B, C. The fourth one is D. That's where other things can happen here. What is the objective? The objective is to get you to D. Try as much as we can. We can try to get you to D. Well, look at this. DXY. DXY, look at this. DXY. This is the dollar. Finally, it made its leg D. Above the 103.56 level in the daily chart, the leg C that went to a peak C, took 3 bars. Today's the 3rd day, and we're in leg D. Monthly chart, a huge leg D to the upside, broke the 100.39, 100.51 previous highs. Nice move up. This is very significant, but we have to wait in the monthly chart till the end of the month to be able to decipher. This is so far looks like a leg D, probably a peak D in the 120-minute chart. But most importantly, what we're looking at is the IWM is missing that leg. We tried to get it today. We just missed getting it for another trade that is trying to get to the 138.83 level. Wow, what a struggle. It should still do it because there's a pattern that I'm going to be discussing in my webinar tonight. It's called the Chapman wave falling X formation. It just looks like an X. You've got the handle, and then you've got lower lows and sharply lower highs and sharply lower lows. And if it breaks above that, there's a good chance that you're going to retest the previous high. So we got to wait. Hasn't happened yet. Nice. It took 4 days just to struggle from the lows. Actually 5 days from the 134.81 where we were taken out of our long position from way down there. We're just waiting. We had a trade. One took a 40-cent loss on the vehicle that we used yesterday, a day before, and then yesterday we got in and made 47 cents and just missed the low today trying to get in for a rally. All right, that's the way it is. So that's what those peak Ds do. That's what I'm going to be discussing. I'm discussing as well there's something like the TLT because it's all very well looking at things on their way up. How do you pick a low of consequence? I'm going to be discussing how the iShares 20-year Treasury bond ETF has made a significant decline from the 144s down to the 116s, 117, 116 area, trading at 117.45. Surely the same thing works on the way down. Well, it does work on the way down, but I'm going to discuss what this rising MACD is doing when the price hasn't responded to the upside, and what the stochastic rallied sharply to about the 37% level and then failed. What does that mean? And could it succeed? Is there a way that it's going to turn? What does the dollar implication in leg D mean if there's now some kind of a digestive moment? Will you finally get something like the VIX index? And this is just hard to believe. Look at the VIX, down to 11.60, but we're making almost all-time recovery highs, and in some cases all-time highs, and yet the VIX hasn't broken below 1130, the low of the 8th of December. Well, we're discussing relationships like that. The third one is where we get more into the time concept, where you can use 120-minute chart or the 60-minute chart to get your daily entry point, and then your daily goes to the weekly, weekly goes to the monthly, etc. So now let's just go through the numbers. Dow in leg G/C. The look of it says that it's probably a C. I will type in a G/C right now just to make sure that you understand that there can be parallel wave counts, especially when you've got this particular pattern. It's a very familiar pattern for me and for my subscribers who have studied the MACD. We were discussing that tonight. What is the implication of a move that doesn't break down, and yet the single move of the fast-moving average, the 9-period differential, the green line, goes all the way to a G? Well, what does that mean? What are the implications there? So those are things that we're discussing because it's part of the webinar 3-part series. If you go to the front page of TFNN, there's still time. You can sign up to get in. Tonight's second night, but we'll be reviewing the first one over and over. I'll be giving charts and for things to patterns for you to recognize and to do the wave counts as you can get practice in it. Now, let's just go through this. The Dow now has very strong support at the 19,832, 18,778 9-period moving average. When we're looking at the upside, because you're at an all-time highs, you see the way this is working. I'm discussing that tonight as well. Chapman wave stalk leg formation, leg D in the monthly. Well, what does that mean? What's this? Almost like a single leg A up in the weekly chart. What does all that mean? So for subscribers like this past weekend when I did my usual Monday review that I do for the week, sending it out Saturday, I discussed these things, and I discussed how the stochastic holding at 97% is really good action. It's flattening out. It's not breaking down. You see, every other time it's broken down, the price fell. This time it's holding. So that's all very positive. All right, so now let's do this. We've got the Dow, we've got the SPX, with the S&P right now, S&P 500. Hasn't gone to the all-time high that made it peak E at 277.53 on the 13th, but it's trying its best to get there. He has that single leg up with that doji candle of last week. It has a bunch of implications, but in the meantime, let's just look at this thing intraday, and we're going to say that 2273s is probably resistance coming up. I'm not sure if we can get to 2277.54 to start another leg up, but we're getting close to quite strong resistance. But it's most important to be looking at the support, which is now in the 9-period moving average at 2255. And you see this inside. We worked on this last for my webinar 1. We'll do it again today. You see this Chapman wave inside track, the channels, how we use these channels with an inside track. This is the resistance area, and the S&P hasn't broken out of it. And the dollar INDU in the monthly chart it's still got a way to go. It can go all the way to 20,090s. That's the next resistance point based on the monthly inside track resistance. Let's go to the QQQ series. QQQ right now, 120.60 up 51. That's a peak F, unless it's recycled, but I think it's a peak F, and if it goes high above 121.12, that goes to a G. I'm going to call it a G for now, but it's really struggling. And one of the reasons is it's got major stocks like an Amazon, which is really, it's up 5, big deal, but it's really stuck in the lower range, having made it, I think, quite a significant monthly top at peak F. So we'll do that. We'll come back. We'll talk about the IWM. We'll talk about gold down 13 and the relationship of that and crude oil, which is down. I'm sorry, it's up 57 cents. I'm right
Today,
back.
it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, let's go to Jim in Golden, Colorado. Jim, how are you?
Oh, okay, Basil. How about you?
I'm very well, thank you. You'd like to look at?
U.S. Steel, symbol X, and if you got a chance, Halliburton, HAL.
Okay, so let's start off with X right now. I've got Halliburton all notated. Good. So United States Steel Corporation is trading at $36.34. It's up $1.86. It made a peak D in the Chapman Wave at $39.14 back on the 8th of December. It's had a spectacular run from a year ago, exactly a year ago, almost to the date. It was at $6.80. And now it's trading a little higher, having hit, what did I say that was? $39.14. Let me type that in so that I can see that nicely. 39.14. So do you have a position at this particular point?
Yes.
Okay. Did you just get it or you've had it for a while?
Yeah, I had it for a while. Actually, we did pretty well.
Yes. So now what I'm going to ask you to do is this. Is it an analysis, or you're looking maybe to add, or the question is, what do I do now?
Yeah, exactly. What do I do now? I heard something about the tax rate on capital gains being lower next year, and I don't know.
Well, nothing, of course. Right. Well, nothing, of course, is going to be finalized until Trump is in office, and he has to do this. There are a lot of things that have to happen. I mean, all this is. Everything that's happened in the market that people think is based on a Trump presidency is based on an expectation because he's not even in office yet. So sometimes between the anticipation and the reality, there's a hiatus, there's a break, and within that break, other things can happen. So it's working well right now. I don't see any problem. The market was ripe for a higher push. Now I think we're starting to see some select action. And if I looked at what I said to subscribers yesterday to my opening call, is that the SLX, which is the Van Eck Vectors Steel ETF, which made a high, let's see, a 43.89 back on the 8th of December, and did it in a quicker time with that left side, right side price time match that I always talk about. And I treated it from the high that was made back in October, the week of October the 31st of 2014, going all the way from the 43-ish area down to 15.30 and then back again. And you can see I've used different midpoints here, but this one worked out quite well. I think that steel is ready for some kind of a digestive phase. Now, if you're in a core position, what's difficult about this is that you really don't want to give up gains. But when you're looking at, for instance, this is leg C in the monthly chart. The way the technicals are looking, it appears from the perspective I have, especially based on the way that it's pulled back from peak G/C in the weekly chart, that a consolidation should go on, and it could go on it could even go down to the 36.35 level, and it could trade between that level for the next 2-3 months, and maybe even testing the 42-ish area, 41, 42-ish area. So under those circumstances, I would rather look at shorter. So I'm looking at the SLX. And the reason why I brought that up is the SLX is the umbrella for all the steel stocks. Now I'm going to go back to US Steel and say that this was a leader on the upside. It has held extremely well. It's at 36.26 right now. It made a low just 2 days ago. Yesterday, it made a low of 33.89. And I can draw a pattern. This goes right to my webinar series where I showed certain patterns. This has two patterns right now. It's the H pattern that had a successful test, which says it could have a bounce. And that bounce, in fact, could go from, if it closes above 36.86, it could retest close to the 39-ish area, 38.80 to 39.20 area, maybe even make a new recovery high. So I don't really want you to do anything with your core position. But on a trading basis, I would not be surprised if tomorrow's candle gives us a wealth of information. If tomorrow US Steel trading at 36.21 up $1.73 pulls back either tomorrow or the next day, if it pulls back and it breaks under 35.20, no, if it closes under 35.20, the pattern that I'm looking at says, okay, slightly lower highs, slightly lower lows would probably be in order for the next few weeks after such a spectacular move. But fund managers are very reluctant to break away from sectors that have been very favorable to them. You saw what happened in the IBB for so long, and they kept going back, and they're still going back to the IBB, the biotechs. And that's just a dead sector. It's just not going to do all that well because it had a massive run, and now everything is going against it. But with steel, something says that there's an economic structure that is viable. There must be, because otherwise you would never get steel going from the sixes into the 30s and into the high 30s. So I like it, and I'm just going to say to you, if in the next day or two it only pulls back just a little bit, like 60 cents or so, you might want to just have a little trading position so that you get your mind off your core position, because at this point I'm not sure I want you to touch that, because it has been a favorable sector. I think it's just digesting the gains. And you could have a trading position if you want to pick it up at about 35.65 to 35.50, and you could have even a half a point or a 75-cent stop, because if it takes out that high that I said of the 14th of 36.86, that's a nice chart pattern. That creates that cup formation. So I'm just saying to you, I don't know if I really want you to start messing with your core position. Do you ever do options?
No, not in options yet.
Okay, all right. Because if you were in options, I would say as a protection, you could buy the February 35 put and just have that and say, you know what, market goes down, I'm covered, I'm not making anything because my put will make up the difference. So I don't really want you to do that. I'm not even sure that I even want you to look at the short side at all. I like it. Let's look at it again. What is today? Today's Tuesday. If you want, we're not here Thursday, Friday. So it's just tomorrow. Just hang on for the ride. How about we talk again next week, early next week? All I can say to you is I'd be really reluctant for you to mess around with your core position. And if you feel a little bit nervous, then just take a little bit off and say, you know what, I'm going to dedicate to put that back at 32.50 or 33.20, a couple of points down, I'm going to put that money back again. That's the only thing I would say to you. If you feel a little bit like, wow, this is a great run, I don't want to give these gains back, then take something off, reward yourself, and then try to put that money aside. Don't use it for anything else. Say, this is going to be my steal stock. I'm going to try to get back in on the next pullback. The monthly chart is looking very good. Weekly's looking good. Hope that helps you.
Oh, yeah. Tremendous help, Basil. Yes.
Good. And Merry Christmas, season's greetings, and a Happy New Year. Let's hope that we can talk again maybe next week, and it's doing very nicely.
Okay. And did you have time to look at Halliburton also, or you got to go?
Oh, you know what? If you want to hold on, I'll look at Halliburton because it's a very interesting chart. It's worth looking at. Hold on. We'll be right back. Folks,
Okay.
we'll be back with Jim in Golden, Colorado. Dow's up 85, S&P's up 870. It's kind of lagging somewhat. The 500 stocks to the 30 stocks. I'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. The holiday season is here, and TFNN Salvation Army Tiger Dollar Special is back. Right now, you can get a 25% bonus on your purchase, and 10% of whatever you spend will be donated in your name to the Salvation Army. The sale only comes around once a year, so don't miss out. Tiger Dollars are a great way to add extra savings to TFNN newsletters or services, and they never expire. Get your Tiger Dollars before the sale ends Thursday, December 22nd, and get your 25% bonus while donating 10% of your purchase to the Salvation Army. For all the details, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. We're looking at Halliburton. We're on with Jim in Golden, California. Not California, Colorado. And HAL is trading at 53.82, up 10 cents. Now, we've seen a couple of stocks do this. Look, the QQQ. I'm only looking at patterns now. Look at the QQQ. It had a pullback and then it went sideways. There are a bunch of others. But I'm going to go back to this, and I wanted to look at it just in terms of chart pattern and say that this flatness right now for a few days trading between the 54-ish level and the 53 level suggests to me that it hasn't broken down, even though the MACD and stochastic have pulled back really sharply. I'm just trying to think. I actually did this chart as one of the charts we were going to look at tonight. It's just so familiar, the pattern. But in the meantime, back at the ranch, price is the arbiter of a trend. And the price is, hey, I'm pulling back, but I'm not breaking down. I haven't closed underneath the 54.01 area. So here's my question to you. Do you have a position in Halliburton?
Yes, we have one in that also.
Now, is it from lower down or just close to where we are?
It was down. Yeah, it's lower. But you know what? We don't have the information with us at the moment, so we can't really say. But we do have quite a profit.
Okay. See, this is a little different. The way I'm looking at it, Halliburton, I've got it. There's an alternate wave count. I'm trying to keep it as simple as possible. And I'm looking at the weekly chart. And the weekly chart says from the low that was made back in September at 40.12, has had a fabulous run. And this is leg C. There should be a D, but I'm not sure how long this consolidation is going to take place. So this is a little different to what we were looking at in U.S. Steel, only in that if I look at it as a sector, the OIH broke above the 200-period moving average in the weekly chart, pulled back now, touched it in the monthly chart, pulled back. Having tagged it once, it says to me it has to try within a certain time frame, and that time frame actually is, I'd put it at, what do we do? We middle of the end, towards the end of December. By the first week, by the latest, the second week of January, Halliburton needs to be above 35.50, and it's at 33.91. It doesn't sound like a lot, but that could be a struggle. And if it does that, I'd say great. Now it's going to go retag that 35.30s 200-period moving average, but it is a peak F, and I have to put a down arrow here in the daily chart. That's a little different than U.S. Steel because it's not showing any strength today. And the MACD's pulling back, and stochastic's gone from way in the 90s to the 62% level right now. I don't like that. That's a little too much. So this is what I'm going to say to you. I would, that's in the OIH. Now let me go back to, sorry, that was Halliburton is trading at 53.80. So this is what I'm going to say to you. If Halliburton closes under 52.70, I would say to you, you know what? You can take a little bit off. Now, this is different to rewarding yourself because U.S. Steel looks like on the monthly basis, it can go quite a bit higher. This one's saying that I might go higher, but not all that much higher because the way that it broke out in the weekly chart and the MACD says it's getting just a little bit tired. So I just wanted to say to you, here I would put a stop in. In fact, I put the stop in at $53. That's just 79 cents away. And that would just be for a small part of the position. And then we have to relook at it to see if you want to deploy that money back to go in for that leg D to the upside. But, I don't want to make it sound like it's too bad. It's actually acting very well in the weekly chart and even the monthly chart. I'm just a little concerned that there's a pattern here in the daily chart that has the pattern that we call the head and shoulders pattern, that it could rally just a little bit, maybe just a little bit more, and then if it breaks down, I'm just a little concerned that if it closes under 50, let's call it 52.50. If it closes under 52.50, there's a gap, and that gap is way down at 50.82 and 48.49. That's really what I'm concerned about. If you got in low enough to say, you know what, I can handle 3 points, 4 points here because it should go to leg D, then that's fine with me. But I'm just saying, even right now at 53.80, I would take a little bit off and I'd just keep that money aside. I'm not sure I'd redeploy it, but I would take a little bit off because of the pattern that I'm looking at. So that's a little different to United States Steel, and that's just, if you think about the risk reward for yourself. But I'm just saying that if it does start to break into the 52s, it could have a pretty quick pullback, and it could break into that gap. And that gap's quite a few points down. So giving yourself a little reward now for trading it so well, and then you can make the decision whether you want to put it back. And maybe we can talk in a week, and we'll look at that.
Okay, now the gap you're looking at is for like on the 30th of November?
November, correct. From the 29th to the 30th of November, there's this big gap, news-related gap, maybe earnings, whatever it is. It hasn't even started to fill it, but if it does start to break under that 5250 area, there's a good chance it'll fill it, and that's the way down. That's all.
Okay, great. All right, well, Basil,
Nice.
I really appreciate the help. It's been tremendous information. And,
First of all, you're the one that had these beautiful trades. I have to congratulate you. That's really nice position playing, and we're just trying to refine it a little bit. And so good luck with that.
it was 100% luck, I think, Basil.
Yeah, well, that as long as you keep doing that, that's great.
All right, thanks again.
Congratulations. Thank you. Bye, Jim. So, folks, now the Dow's pulling back from 62. Now, one of the things that I often talk about over the years is when we get to millennial levels like 10,000, 20,000. Now, they don't happen that often, of course, but those are psychological levels. And what I've said is 20,000 is really not a big deal. But once the Dow starts trading in the 20,000s, that becomes a psychological big deal. You know what it's like? It's like going to the store and paying $19. You're in the teens. Even if it's $19.99, like for gas, $2.99 or whatever. Once you get to $3, you're in a different ball game. Psychologically, it's only a penny. It makes a difference, and that's exactly what's going to happen. When you hear every day the Dow's at 20,000, the Dow's at 20,000, all of a sudden you're saying, what happened to the 19,000s? So that's what I mean by it's not a big deal at all. In numbers, it's a really big deal psychologically. And that's why there might be a little effort now, a real struggle. And I said that I had a question about the 120-minute chart. Let's just discuss that. So now the daily chart in the Dow is in G/C. I should make that a G/C because it broke to a new recovery high above the rectangle formation. What is the rectangle formation? Very clear. Here's the rectangle formation. Now, what happens with rectangle formations is within a shorter time span, with this flag formation, you could, in fact, have an inside Chapman wave A, B, peak C, peak D that goes right to or just above the previous high and then pulls back and goes back in. So now here's the problem. After the letter G, there's no H in the Chapman wave methodology. That's what took years to develop. Years and a lot of charts and a lot of dough. But there is no, it's like the piano. There is no H. It goes C, D, E, F, G, A, B, and then you get your C again. All right? But in this particular case, there is a recycle. And I'll talk about that in a moment. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, now, so let me just talk about this. There's a technique in the Chapman wave that's called the instant restart. It can only happen at peak D. This gave just a beautiful signal in the technique that I used, Chapman wave 5, at a peak G and a pullback. That was the Fed day. You remember? Oops, it goes all the way to 19,966 and goes down to 19,748. And then we went rectangle and in a kind of a triangle, symmetric triangle. Formed the apex yesterday. Was that yesterday at the close? And then bam, we shoot up and we go above it. This is the same chart. This is the Dow 120-minute chart, and all it has is just a couple of indicators. This has the MACD and stochastic, which we're going to study tonight in my webinar, my second of my webinar series. And now we've just snuck above it. I mean, that's the rule that I have about the rectangle formation. Now, I need to be careful. This can't be an H, because at a new high, and that was a peak G. But if I use the Chapman wave instant restart, the whole idea is to always be as close as you can to what you think is the correct wave count. And that's what we'll be doing tonight in terms of the wave count. You want to do your very best to do that. Well, everything looked really good at peak G. Going sideways for all this time, you know, a rectangle formation can last a lot longer than your patience. Well, within the context of the market, this is not a big deal. It just snuck up to 19,987, 12 and a quarter points away from the all-time, from the 20,000s, and it pulled back. So I'm going to say, if that was an instant restart, right, all I'm doing is just using the methodology. I'm not trying to make up anything. There's nothing here. I can call this E/A, F/B, G/C, and now we've got a D/B. D say, oops, where did it go? A D/B. One says, be a little careful because you could be making that peak D where you can have another bit of a pullback. B says, ho, this is really positive. We should be going to a C and a D. So I look at the MACD and I say, wait a minute, this hasn't crossed positive, but it is improving. Look at these vertical bars. These are the histograms moving up. Stochastic's moving up to 76%. I don't see anything weak in the stochastic yet. Hasn't gone to 80%, but this is still very good. So I'm quite prepared to have an alternate wave count. Now, we just missed by, I think it was 16 cents or something, going along the diamonds on a pullback. Going back, we were long, we took profits, and now I wanted to get back in. I said to my subscribers, I'd like to be there for 20,000. I mean, we've worked so hard. I'd like to be there. Well, we just missed it by a few cents, and now the diamonds are trading at 199.19. Not a big deal, because we wanted to get it under 199, and it just missed getting there. And there was a time limit. The time limit's finished. So we could still do that. But I'm very comfortable saying DB, and I'm watching really closely to see what happens now. Why? Many reasons. Let me just do this real quickly, and I'll try to cover the questions that we get to right as I'm doing this. Let me just quickly do this. I'm going to diverge for just a moment because Greg wanted to know TGB. This is a trough A in the weekly chart, in the daily chart. It's had a huge pullback. It could bounce a little bit, but I think it's going to consolidate a little longer. It's at 0.80. It's had a spectacular move going. We just missed it by like 3 cents in the 0.45 area. And now it's, and then it hit almost $1, and now it's trading, pulled back to 0.70, now it's at 0.80. So this is copper. The reason why I wanted to do it, because I haven't looked at copper today. This is part of copper. So unable to call trough D in the 120-minute chart. Let me just have a quick look. Trough A, B, C. Yes, trough D. Now, the question is, does day have enough strength to move higher at test 0.71? Greg, happy holidays to you and your family as well. But first of all, Greg and Austin, I just want to tell you, you could nibble on it right now, TGB. It's at 0.80. But don't give it very much. Why? Because the 120-minute chart is improving, and it needs to very quickly get into the 0.85 area. So give it like 6 cents. You get it at 0.80. I'd even give it only 4 cents because it's just got to work right away. And then just have a trading stop and treat it as a trade. It's just a trade, right? I think it's going to take much longer to consolidate after such a huge move. All right, now let's get to the nitty-gritties. I want to talk about the XRT. So the XRT is holding towards the highs, and the XRT is the spider retail, and the daily chart went to a peak A, B. It's at a peak C, but it's under the previous high, so that doesn't mean to say it has to go to a D. I call it the gray C. And the weekly chart has already gone to a D. And the week, it's almost done, Christmas. We've just got this week, right? So I'm suspecting that the XRT and the RTH are suggesting to me that there's huge buying of gifts, but I think profits are going to be squeezed this year. So the RTH is kind of fading at a peak F, peak B in the weekly chart. Amazon's not doing that great. It should be way at the highs. And it's saying to me, sales are going to be huge, but profits are not going to be as good as everybody thought. That's really what I'm saying. Okay, hope I answered that. Next thing is GIS. I want to do defensive stocks. Great. GIS. Oh, I used to have it all notated. I don't know what happened to it. That's General Mills. Forget it. This is looking very poor. If it can hold 60 in the next 3-4 days, ask me again about General Mills. But I do think that it's not in the sector that's being favored right now. PepsiCo and that defensive stock acting way better. And they have a better mix, I think. So at 104.58, I'd say if in the next 3 days, 3 sessions, if PepsiCo, Pep trading at 104.58 down 83 cents, takes out 103 support, it's in real trouble. If it manages to break above 106.53, that's very nice action. And then I'd immediately draw in this trend line here for the Chapman Wave falling axe, and that becomes your big resistance if it has a rally at all. And of course, this is the season for drinking Pepsi and Coke and all that stuff, I guess. 107.50 to 108.20. That's the resistance. I actually don't think it's going to get there right now. So that answers that. Yeah, just be careful of those. Bob wants to know about C. Why am I coughing? Let me just have a drink of tea. Financial is one of the best sectors going. High-level consolidation. The question is what, where, and how. And all I can say is made a peak E double top. It could make it could break out. C is Citibank. Oops, E. That's an E. It could break out, but at 60.33, it's just holding really well. I think it's a high-level consolidation. I would not be surprised if over the next few weeks we do see a test of 58 to 56. And now I think there's a little bit of a limited upside to it. Maybe it could go to 61.5, 62.25. The all-time high, yeah, good point. All-time high is 60.95. we've seen a lot of these stocks just tag those old highs, and some of them broke out, and a lot of them have just stalled there. So it's very good. On the next big pullback, the financials are what you really have to be looking at. I've covered a bunch of questions. Lost my settings, Dan. I just sent you the settings. Oh, and bonds. TNX.X. Oh, dollar. TNX.X. Oh, interesting. PE. All right, I'll get back to that when we return.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Folks, listen to the shows coming out. Fabulous shows. Swim Lesson. You've got, Steve Rhodes. You've got Dave White. I think Dave might be away. You've got Tom O'Brien again. You've got Andy Heck. At 6 o'clock this evening, I do my second webinar. If you're really interested in looking at these different chart patterns, like this A pattern straight up, straight down, called the Eiffel Tower. If you're looking at D's and E's as potential tops, this is a perfect time for it, because I'm going to be doing a lot of work on the failure patterns and where they are right now. And the failure patterns, like here's the GDX. Is this a candle to take note of with $1 at leg D? This is in leg D down. Is this now the moment where gold is going to pick up? I'm going to show you what I'm looking at, why I'm looking at it. Is this the moment that you're looking at the TLT, perhaps forming some kind of a base here? There's a whole thing that I just did on the TLT right here, TLT. I'll show you here. I've got these four. Look, this is the naked chart right here. This is the TLT. Just open it up for you right here. for all the notation. Look how many A minuses there are. I couldn't even, once or twice it'll go to just a nominal B and it'll be a B minus. On the way down, they fail, just the way on the way up. The troughs are very quick. And then I'm going to show you what happens with the stochastic, just the stochastic and the price, then the MACD and the price, and then the two together. I'm going to explain what's going on here, why you've seen a rally in the technicals and no rally whatsoever in the TLT, the iShares 20-year Treasury Bond ETF. What would make it push above the blue line, the 9-period exponential moving average? So that's how I'm going to try to do it tonight. I'm going to try to put it together so that those who have done my courses many times are doing a refresher. You know what? You won't get bored. Believe me, we're going to be looking at things in details that we don't often look at. And we're going to be doing it for people who have never done it before in a very thorough way, so that there are going to be moments where you don't even have to be aware of the notation. You're looking at channel lines, trend lines, all that sort of thing. Just I'm trying, in fact, to whittle away. I'm trying to make it as brief as possible in the printed sector so that I can go to live charts, because that's where the action is. I want you to know tomorrow what we're looking at. That's the way I'm going to do it. Okay, so before we wrap up, I want to go through some of these things right now. Here we go. Let's just go through the sectors. INDU, the Dow, failed to go to leg D. Is this a G? Is that a C? Well, there's a technique that I have based on the MACD, the moving average convergence divergence, which we'll be looking at very closely for evidence to see whether or not this is some kind of a G-top or whether we're going to go higher. The next thing is the S&P. SPX has a different pattern. You'll see that the SPX did not take out the high. And with the stochastics, the MACD is starting to flatten out. The stochastics now at 83%, way off the lows. What does that mean? We're in the channel, in the area that says that's the repellent zone. It's got to break above it decisively. The IWM, every time, this is the fifth try that it's had to get to leg D, and it just cannot do it. Will it be able to do that this week when it's very quiet, nobody's looking? That's going to be the question, because the technicals are actually quite weak. It's just the price that's good in the daily. The weekly technicals are very strong. Let's look at the IYT, which is the transportation index. Try to rally above that Chapman wave resistance line, and look at Y, which is Allegheny. I mean, what a stock. Look at this monthly, just recycled. I don't think that's a G. That looks like a C to me. ABC. G/C. Fantastic action in Allegheny at 611, down a little bit today. We're going to be talking about some of these patterns. So with that, I bid you adieu, and I will see you a little later on with Tom O'Brien. Have a great day, and I hope to see you tonight at my webinar. Otherwise, I'll be back tomorrow. Have a great day and good trading.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,